Hey everyone, today Adine and I are talking all about how to get your student loans paid for by your employer tax-free, or at least pretty close to it. Check it out. Hey everyone, I'm Logan.
Hey, Adine over here.
All right, Adine, so walk us through what this section of the CARES Act talks about as far as getting your student loans paid off.
Yeah, so let's talk about really, again, broadly the background here. So companies have always been able to subsidize essentially continuing education or even just education in general for their employees. And the limit has always been $5,250 in terms of like if you take a class for a certificate or you go try to get your MBA or something like that, your company was able to pay for up to $5,250 of that education, assuming you got a grade of C or higher.
And that's
we're able to,
$5,250.
correct.
Is that in a year or total?
Per year.
Okay.
And so you have that, but the student loan portion was never really a big deal. And then after 0809, we saw more and more companies realize that people still had these huge student loans outstanding. So people started changing their benefits plans to somehow encourage people to, where it really stemmed from is people were not saving for retirement because they had these student loans that they had to pay for. So companies were trying to figure out, okay, how do we rework our benefit structure so that we can help them with their student loans, but still allow them to participate in the retirement plan at work. And so you've seen a lot of Silicon Valley and tech companies saying, okay, well, if you put X percent in your retirement account, we're going to take Y percent of your salary and pay your student loans. And the company ultimately had to add that back to that employee's paycheck as a benefit that was taxable. And so what this change in the CARES Act did is it, for 2020 only, allows companies to pay up to $5,250 towards student loans of their employees without the employee being taxed on that amount.
Okay, so so let me just kind of recap it real fast. The way that I understand it is employers can now pay $5,250 worth of student loans in 2020 for employees, and the employees actually get the full amount instead of, getting $5,000 from the company, paying taxes on that, and then putting that towards the actual loan that they have to pay off.
Exactly. So it basically decreases the amount of total waste on tax of this benefit amount. So it's a pure benefit dollar for dollar for the employee, as long as the company has, it's called a Section 127 plan. They have to have it in place. If you don't have one in place and you want to take advantage of this, you can implement it. Obviously, we're running out of time here in terms of implementing. There's requirements for how employees earn the benefit. So usually that's hours worked, because with a lot of these plans, they only want to make them available to full-time employees, which means a number of hours that you work in the year. Where you can do it the other way, where it's a very low threshold to get this benefit. Of course, your company just wants to be nice and provide this benefit to people at the lower thresholds. And then it's a question of, are you going to give that money to the employee to have them pay it and then get some sort of proof from them? What I'm recommending most of my clients do is make that payment directly to the servicer of the student loans. That way you have proof that you actually did pay it towards student loans.
So for me, I have a couple people that have student loans. How does it work? What do I need to do to push this thing through? And do I just say, instead of paying you the next $5,250 in salary, you're going to get paid $5,250 directly towards your student loans? I'm still paying the same amount, but you're actually making more because you're not paying tax on it.
You're not allowed to have them choose between this benefit and cash compensation, right?
Okay.
So what it comes down to is then how do you, without doing that, do it anyway? And for most companies, it comes in the form of year-end bonuses, right? So most companies don't give bonuses throughout the year. They kind of wait until November, December, figure out where they're at, Who do we want to give some bonuses to? Tax deductions on that. So what you'll see is more and more companies are going to again, you have a timing issue. You got to figure out, can you afford to offer it? And if you do, you're just going to do it.
Right.
But then you might on the back end say, well, I had X amount of people do it. So instead of our bonus bucket being X dollars, our bonus bucket for this year is X dollars minus what we gave out in this employee benefit plan. And so everybody else's bonus is also going to go down so that we're within the spirit of the rules here.
Okay. So does this money, let's just say we have the means to do it, does this money mean that that also gets put against PPP? So it's officially like the government, if it'll get forgiven, or is this separate?
No, this is completely separate. It has nothing to do with PPP, EIDL. It's a completely separate benefit plan that a company can offer to its employees. I haven't seen any specific rules for how long you have to keep this Section 127 plan alive.
Right.
So the consideration is also for next year, for 2021, are you comfortable with keeping this educational assistance plan in case somebody wants to get a certificate or somebody wants to go get an MBA? Will you still reimburse from the 5250? Or are you literally just doing a plan for the next 7 months to help with these student loans, and then you want to cancel it? And then you just got to be careful with who's getting the benefits with this, because there are some rules in terms of owners versus employees and some affiliation rules. So you just got to be a little bit more thoughtful about down the road how this is going to look on paper.
And if you're an employee and you have student loans, how do you approach the company and say, hey, look, there's this new thing coming out or just came out in CARES? I mean, I guess what would you do if you're an employee in a company and you have student loans and you're watching this video and you're wondering, well, does this apply to me or does this work for me?
Yeah, the first thing to do is obviously go back to your benefits package when you got hired or when you have your annual benefits meeting, go through all of that to see what benefit packages your company offers and see if there is this educational assistance plan already in there. Because if they have a Section 127 plan already, super easy for them to tack on this piece. And you can say, hey, have you seen this? I'd like to participate. I'm sure there's others here.
Right.
Can we tack this on? Is it reasonable to do that? And you'll get a yes or no. If your company does not have one, obviously to make it easy on them, if you do the research and you look online in terms of what it takes to set up a Section 127 plan, the paperwork, it's relatively easy. It doesn't require an attorney, doesn't require an accountant. You probably want to use one anyway, just to review and make sure that you're not screwing anything up. But you can probably have your HR person call the Society of Human Resource Managers and ask for a template. Mm-hmm. The ones that I've put together for some of my clients is a couple pages long, nothing crazy in there. So the more work you can do as an employee to make it easy for your employer to implement this, the more likely they are to adopt it. And then the second piece is just literally money. Is there enough money from the company to do this for everybody? And then how many people in the company have student loans? So you can also try to survey if people are willing to share.
Right.
To kind of have an idea, again, to present to your company and say, well, there's 10 of us at this company. Only 3 of us have student loans. So your maximum exposure is this. What can we do here?
And then with something like this, like if you only have 3 people, I mean, does that, from like a fairness perspective, if the employer puts $5,000 and helps out those 3 people, does that mean that they should also be putting $5,000 as a bonus to the other 7 people? And it's just a different way of paying, or does that start to get more on like the legal side of things?
You want to be very careful with that because now if those 3 people have historically also gotten a bonus and now all of a sudden they have a 0 bonus, you better have really good reasons other than providing them this benefit. So again, I think the whole bucket of bonus money is going to go down and get distributed by the same formulas and thought process that you've had in prior years, just to make sure that you're not kind of getting yourself in trouble with it. But I would not say, okay, well, you got educational assistance or student loan assistance, we're not going to give you a bonus.
But couldn't everybody else
that's the
complain and
closest
say, well, we all got the same bonus, but then they on top of it got $5,000 worth of their student loans paid off?
Can they complain? Sure. The question is, how does your company determine bonuses to begin with? And I've almost never seen that everybody gets the same bonus amount. Right. So if Joe gets $1,000, doesn't mean that John's going to get $1,000. There's usually some sort of documentation that goes on. We either have some sort of performance metrics. Sometimes we look at length of service. Sometimes it's random. So whatever you do, you got to document, and you should have documented the last couple of years, and then document the next couple of years as well and into the future to have some sort of proof of why each person got what they got.
Right.
And it's ultimately driven by your pool of money. You can't give the same amounts every year. No person gets the same amount every year either. So it's just having the consistent process of how you determine the bonuses. And when you start a benefit plan, the money's got to come from somewhere, right? So even if when you start a 401k plan, for example, you're committing to putting some money in there as a company. And when you commit to that money, that means it's got to come from somewhere else, and it could potentially come from cash bonuses. And so, yeah, can people complain? Absolutely. Will they? Absolutely. But you as a company, again, got to make that decision of what's more beneficial to your employees.
Right. Okay, cool. So to kind of wrap it all up, the way that this is all played out, it came out in CARES Act 1, and we say CARES Act 1 because there's not another one yet, but there may be. CARES Act 1 says that instead of putting, a little more than $5,000 towards paying off employees' student loans, which previously would have only been applicable to courses or programs that are relevant to the current job, now you can actually put it towards whatever student loans that they currently have. They just have to get a Section 127. Is that what? Section 127, get that bad boy filled out and actually get their loans paid off, paid towards tax-free, instead of getting the money, paying the taxes, then paying the remainder towards their student loans. So anything I missed on that?
That was the majority of it. Final note on owners, and especially a lot of my clients are S Corp owners or S Corp companies. The owners are allowed to have a minimal benefit. They're not allowed to get more than 5% of the total benefit that goes into the plan. And then there's also what are called attribution rules. So immediate family members like spouses, kids if they're dependents, and parents are also considered as owning the same amount of the company as the actual owner. So, let's say, for example, you Logan, if you hired your dad and he had student loans, he would be treated the same as you in terms of ownership, and the max that the two of you combined could get would be 5% of the total benefit amount. So if you have one employee that gets $5,250, the most you can get is 5% of that, which is like $210 or so.
Okay.
So just be mindful of that, of your actual tax structure and how it implicates you as an owner, because the rules are very different.
Okay, cool. Everyone, thank you very much. Make sure that you hit the subscribe button if you want to stay up to date on anything stimulus, PPP, current situation, updates, always coming at you. Thank you.